I strongly believe if you want to succeed well enough, sit down and don't leave your chair until you figure out a way of succeeding.
Hey guys, welcome back to the Realty Room, your go-to podcast for realtors. I'm your host, Miles Pointer, joined as always by my co-host, Marcus Butler.
What's going on?
As we come into the holiday season, we're nailed with a lot of questions. Is that the right word? Nailed with a lot of questions?
Yeah, nailed.
We have a lot of questions by family, and your Uncle Dave at the table is asking you to describe what the market is like, right? So we're gonna get into kind of some questions that relatives and friends will often ask you during the holiday season or spending time with everybody, and how to answer some of those questions about what the real estate market is doing. And we're also going to talk about getting in front of your sphere of influence and your past clients. It's a great time to reach out and connect with people, so we're going to talk about that.
Yep. Before we get into that, today 30-year fixed conventional rates, we're sitting at 6.875, and FHA and VA 6.625. There's a lot of questions about interest rates. One of the most important ones I think everyone's curious about is, and you'll probably get these questions during your holiday season at Thanksgiving or events or whatever, but if the Federal Reserve is reducing rates, and they have already, why are mortgage rates going up?
The funny thing is, I don't hear this just from people non-realtors. I hear this from realtors too.
For sure.
There's definitely a misunderstanding of when you hear Fed's going to lower rates this week. Yeah.
You go tell all your clients, and then rates go up, and they're like, what the heck? What? Yeah. This doesn't make sense.
Yeah. So we're going to get into that too in the podcast, explaining why that happens.
Yep. All right, guys. But before we do that, wherever you're listening or watching, if you're on a podcast, please like or subscribe or whatever they call it, wherever you're listening to. If you're on YouTube, please subscribe. You can even hit that bell icon. And if you want to follow Miles on Instagram, he's at Miles Pointer. And I'm at Real Mark Butler. That's Mark with a C. We'd love to see you guys on any of those platforms.
Yeah. You should follow us. We're pretty cool.
We are pretty cool.
Yeah.
We have fun. We do our best to entertain and educate.
Yeah.
So, but anyways, Miles, what do you got? Why don't we start with the whole interest rate conversation? I think that's a really good one. It's confusing for many people, let alone the person that's not in the financial real estate world. I know you have some good thoughts on that.
Yeah. So there are a few big questions that are asked, it seems like, every time you get together with family and friends. And it seems like a big one right now that I've heard, and you've heard obviously, is if the Fed is dropping rates and the funds rate goes down, why are interest rates staying high or even climbing? And it's kind of a complicated subject when you really get into it, but we're going to try to make this as simple as possible. And if I get too complicated, Marcus, stop me and I'll try to simplify it.
All right, that's the deal.
Okay, so first of all, understanding a little bit how the market rate, aka mortgage rates or auto loan rates or anything of that nature, how that is actually set. Is it set by kind of two things. One is it is affected by what the Fed decides to do, but more than that, it's affected by the bonds market. And the bonds market is affected by what investors in this world want to put their money in, right? So if they want to put their money into bonds, more specifically the 10-year Treasury bond, then if they want to put more money into that, demand will increase, which means that the bond prices increase, making bond yields decrease. When bond yields decrease, mortgage rates typically decrease as well. So this happens when the economy is not doing super great, when economic data shows that our economy is in a downturn, people will turn to government bonds because they're super secure, right? That means that tends to force mortgage rates to decline. Right now, we're seeing a lot of investors are confident. A lot of investors are confident in our market, and so they're turning towards like the stock market, for example, instead of bonds, which is in turn down the chain making mortgage rates stay high. Was that clear at all?
Totally.
Okay.
No, it was. I think you did a good job. This is why I keep you on the podcast.
Okay. Listeners, if you need to like reverse a minute and like listen to that again,
just listen to it like 4 times.
But
no, I think that's good, and you do a good job of articulating it. It might, like, I even think it takes me a few listens to like fully grasp it, for sure. And there's another piece, and I mean, you know more about it than I do, so you can correct me if I'm wrong. But what I read is the federal funds rate is actually it more directly affects short-term lending, right? Whereas the 10-year Treasury bill actually correlates more with, say, mortgages, because the average homeowner lives in the same house or has the mortgage for close to 10 years or so before that loan matures or the house is sold or whatever the case may be. And that's why it follows the 10-year Treasury bill. I don't know. That's something I've read. Have you heard that? Mm-hmm. So, but the federal funds rate is a short-term thing. Mortgages are not short-term.
Yeah, and we saw a perfect example of that. Like when the Fed earlier this year in September, the Fed dropped rates by 50 basis points or 0.5%, and
interest rates went down before they even cut the rates.
Yeah, and we
it was
saw
in anticipation.
Rates come down to like even high fives, like right then, and then after a couple weeks they popped back up.
Sure. Other information I've read, and we could cap this off and try and, create like a summary of what we talked about at the end. But other things that I've read, another part of the reason why mortgage rates, got to make sure I say mortgage rates, not interest rates, why mortgage rates have increased, even though the feds have cut the federal funds rate. Another factor is the election and some of Donald Trump's proposed policies, a lot of them, having to do with tariffs and what that might do to inflation. So investors and lending institutions are already kind of making decisions and in anticipation of what's to come. And that's why mortgage rates aren't directly correlated with this funds rate.
Mm-hmm. You're exactly right.
Did that make sense?
No, totally. Okay. Because everything that you just talked about, it affects what the big time investors put their money in.
Sure.
Right now we're seeing that investors are confident.
Yep. And
in confident in our economy.
Yes, and other things that they make their decisions on: jobs reports, retail sales, wage growth, unemployment, right? There's so many factors. I think that's why it gets really complicated, and it's not as simple as, oh, the Fed cut rates, woohoo, mortgage rates are coming down, and that's not to say that mortgage rates aren't going to come down when the Feds cut rates, because I think likely they still will. Just, don't get too excited. There's a lot more factors that go into play.
Yeah. That leads us straight into another big question that you might get asked at the dinner table over turkey. When will rates come down?
Sure.
And
what are you going to tell them?
Yeah, what I've read, so a lot of experts, including like NAR, including Bloomberg, including Redfin, and some of these other companies that do a lot of, focus a lot on the data. They're all saying that rates will drop next year by the end of 2025, most likely into high 5s, low 6s.
That would be good.
Yeah.
And my answer, might come more from less research and more just gut instinct and gut feeling towards everything. And we do research, and obviously you do a lot of research, and I listen to what you have to say. But just naturally, even without doing the research, my gut instinct tells me, early next year we should see some improvement on mortgage rates, not just mortgage rates, but the market in general. Especially because, and I say market in general, another big factor there is the election's over with. I mean, I don't know how many of your clients have mentioned it, but I had several, I don't know, 5, 6 buyers who specifically were home shopping and are like, I think I'm gonna wait till after the election. I even had one tell me they were moving to Spain if Trump didn't win.
Never heard that one before, but yeah.
So we'll see.
Yeah, it's definitely a big factor for people. And I feel like after the election's done, for the most part, if the person you wanted to win won, then obviously you're stoked, and the next 4 years to you will look great.
Yeah.
If the person you wanted didn't win, most likely all those people are like, well, we know what to expect for the next 4 years, and we're not going to wait 4 years to buy a house or sell a house. So
that's a long time to wait.
Especially
Especially if your life is pushing you towards making a move in real estate.
Right.
Yeah, I've seen, I mean, obviously there's varying opinions, right? And I've seen it both ways. Some people are very excited. Some people are freaked out, like, based on the election, and they're like, oh, things are screwed. So it's going to be really interesting to see, especially maybe like in the next year, how things have kind of settled after the election. And it's hard. It's hard to speculate what's going to happen.
Yeah.
But
what I've been telling people that ask me what next year will look like, I tell them next year will most likely be busy.
I think you're right.
Because if rates drop, we're expecting prices to increase, but rates will drop, and that'll help a lot of buyers out. And if prices increase, it'll also make sellers feel like they want to sell. And also another thing we're seeing is there's a lot of homeowners that have sub 4% mortgage rates right now. However, more and more people are realizing that we will not get back down to those rates. So if you want to make a move, you might as well just make it. Yeah, I think we'll see more of those sellers next year.
For sure. I think maybe like a 1% mortgage rate improvement is the goal.
Yeah.
Not, when I say 1%, like we're at high 6s now, like high 5s. Like that would be great. Low 4s. Like I would be absolutely incredibly surprised if we saw even 4.99.
Yeah.
So next year in general.
Yeah. I think that even if we got into the 5s, just having that 5 in front of whatever mortgage rate you have,
$5.99.
It's like, I mean, it's the whole shopping.
Yeah.
How your brain works. If you see $5.99 versus $6, you're more likely to buy it because it has a 5 in front of it.
Exactly.
So,
yep.
Okay, let me ask you this.
Sure. I'm ready.
Kind of my last big question, which we've already talked about this, but how's the market right now? Get that question all the time.
Oh, yeah. And our market is going to be different from everybody else's. There's like the national level that we could talk about, and I think that we've kind of already talked about that in today in this podcast. But there's like the behavior of people based on whatever the election and mortgage rates and all that good stuff. But in our market, we're in Coeur d'Alene, Idaho. What I've been telling people is we're actually doing pretty good. Like our market is actually kind of smooth sailing. Is it flourishing per se? No, it's not. That would be a lie. And we want to be honest. We're the source of information. We're the experts as real estate agents. So it's really important to be accurate with your word. But the truth of the matter is we are in a second home market. There's a lot of mountain resorts, a lot of lakes in our area. Tons of people are moving here from surrounding states, bringing all their money. California, Washington, Oregon, Colorado, to name a few, Utah. So in our market, we are smooth sailing, but higher interest rates have definitely subdued the market a little bit, considerably actually, and a lot of people are waiting because of the election. So how I'm framing it to people is there's been very little growth as far as our home values in our area, and it's just put everyone kind of on hold. But now that the election's over, with the light at the end of the tunnel, hopefully with the mortgage rates coming down a little bit, that's another little nudge. So I strongly believe, although I don't have a crystal ball, I strongly believe that come springtime next year, it's going to be pretty darn hopping in our area. For sure. Would you agree with that?
I do agree. Yeah. I mean, we've seen a lot less growth than we did during COVID. I mean, we were boom town.
Yeah.
During COVID, and we've definitely slowed down, and people can feel that slow down.
Yeah.
Right. But people will only wait so long before they make a decision on whether to move or not.
Exactly. And it's important to keep in mind, life happens and people have to move. Death, divorce, marriage, kids, downsizing, health issues, I mean, relocating for work. Life doesn't stop. Some people have to move.
Yeah.
They just do. They have to sell homes. They have to buy homes. And some people have been holding off. Think about when interest rates started going up. Late 2021 is kind of when they started to, I think in 2020, maybe we're going to have to check after we're done recording here, but I want to say late 2020 or early 2021, they were already starting to creep up a little bit. But then by early 2022 is when they started to go up considerably, right? I think we were like in the mid 4s around that time. And then, the next year we were in the mid 5s up into the 6s. So this has made people hold off for a couple of years, and life is just getting a little more and more uncomfortable for those people who actually need to make a move. So like you said, to bring it back to your point, they're only going to wait so long.
Yeah.
Right? Some people, there's some people that are going to stand their ground, but
yeah. And I will say, I mean, for a lot of realtors, 2024 has been a difficult year, but people are going to ask how the real estate market is. Friends and family will ask how the real estate market is. They'll also ask how the real estate market is for you. Mm-hmm. And I would advise just to stay positive.
Yeah. How's business?
Yeah.
That's another good question.
And even if you haven't had a closing in a few months, just stay positive.
Yeah.
Because the second that you let that negativity get inside of your brain and you start projecting that outwards, your business will be negative.
It will. Don't be a victim.
Yeah.
For sure. I believe in that so wholeheartedly. Stay positive. Don't be a victim. Take control. This is also a good time to encourage people. This business can be a grind. And I remember hitting a low point, like, when I first moved to the area, I didn't like know anybody. And it's like, oh, geez, trying to start in real estate in a new town is pretty difficult. And, I strongly believe if you want to succeed well enough, sit down and don't leave your chair until you figure out a way of succeeding. We talked about business planning, and
I'll post that link up above.
Yes.
Yep.
Business planning. And then we also did one on finding clarity in your business, where we talked about the I forgot what we called it, but the main pillars of your business where you're going to obtain business. And if you can find clarity on that and then just be pedal to the metal in that one direction, or those, hopefully they're running parallel, hopefully one's not that direction and one's that direction. But if you're just pedal to the metal, you will succeed. Like, focus, pedal to the metal, you got this. Stay positive, go kill it.
Yeah.
Regardless what market. Some people flourish in down markets, right? So.
Yeah. And kind of leads into one of the last things we were going to talk about here is reaching out to clients, to your sphere of influence.
Yeah.
The holiday seasons is an excellent time to reach out. And just kind of the first thought I had on that is to remember where you can get referrals from. You can get referrals from past clients. You can get it from your sphere of influence, and you can get it from strategic partnerships.
Yeah.
You know, from your accountants that you use and lawyers that you know, and so on and so forth.
Sure. Yeah, it's not just staying in touch with your clients, but I think referral partners, that's something I wanted to bring up too, is really big too. You know?
So Marcus, how are you this year? How are you going to reach out to your past clients and your sphere of influence?
That's a great question, Miles. You know, Ninja selling is a big real estate system you can use, and it's all about your sphere of influence. That's one thing I haven't leveraged to the ability that I think I can. I think I've always done a good job of just staying in front of people, you know, becoming not just their real estate agent that they used once, but, you know, someone that stays in touch with them and keeps them in the loop on the market and that sort of thing. I am going to do holiday cards. I've actually never really systematically done holiday cards, but that is something I plan to do. Not for everybody, for past clients, active clients, friends, family. I'm not going to do it, you know, I'm not sending out 500 or anything. I might send out, you know, 50 or 60, something like that. Yeah, I mean, I've already kind of stayed in touch with most of these people. So probably just the cards, to be quite honest.
Yeah.
Yeah, how about you?
Yeah, I'm gonna do cards too. I'll probably do around a couple hundred of them to sphere of influence, to past clients, and maybe to people that I'm, you know, hoping to work with really soon. You know, we've kind of been in touch. I might just do that as touch point, kind of a get to know me and my family kind of thing. And then I'm also gonna do some pop buys this year. I'm gonna make homemade fudge. Oh. And so it's not that expensive.
You could pop by my house.
Yeah. It's not that expensive, but it's a good like Christmassy kind of dessert, and I'll just wrap them nicely and attach a card with it, and I'll just go pop by all of my past clients, and again, people that I'm either like they're clients right now, or like there's some people I have that are waiting to the spring to sell, so I'll stop by some of those people's houses, but probably 25 of those or so pop buys, and just spend a couple days and driving around.
I know pop buys are really effective. I'm assuming most people know what a pop buy is, but if you don't, it's where you randomly show up to somebody's house with a gift of sorts. And I mean, there's Facebook groups dedicated to pop buys and email newsletters dedicated to, I mean, it's a big thing in the real estate world. And I do think you cannot really beat like a first person, like face-to-face interaction. And I know they work really good. I mean, if you were a seller and, you know, or a buyer, right? Anyone looking to make a move in real estate, and you kind of knew Miles, and then this guy with this nice professional attitude shows up with homemade fudge, and you have a nice little conversation, your chances of using Miles just went way up, right? If they hadn't already committed.
Yeah.
So I know that's definitely going to be worth your while. I should get my button gear. I'm more of like a new business type of person rather than repeat business, and you know that. Talk about expireds a lot, and I have processes around that.
And there are so many pop buys ideas out there. Like you go on Pinterest, or I mean just Google. Like there's hundreds of there's sites out there that 50 top, you know, pop buy ideas, and
for every holiday season, every time of year. I mean, everything. You could do pop buys with 2 little pieces of candy and a pen with your name on it, and just hand it to them at their front door. Yeah. It's really just an excuse to go say hi. Yeah. Hey, while I'm here, here's this, or
how I think about it is, especially with past clients and maybe future clients too, but I help them make one of the biggest decisions of their life. Like this is the most amount of money that they will ever spend in their lifetime, or if they sold, you know, the most amount of money that they have coming to them. It's a big decision, and because of that, I feel like I'm part of their life. And so I mean, my belief is that they're totally deserving of me seeing them again face to face when I was a big part of their life for 30 days or longer.
That's true.
So that's how I view it. And also, of course, it's good for future business.
Yeah.
And
yep. And there's something I guess I want to say. I know, like, for some people, like, randomly knocking on someone's door sounds a little intimidating. But like Miles said, you were a big part of their, especially if you're doing past clients or whatever. I mean, if you're knocking on your cousin's door, right, you shouldn't be afraid. I understand if there's a little intimidation going to, people like clients or future potential clients or whatever. But I do think when you knock on the door, like, so many people are going to be excited to see you, and you're going to be surprised the conversations that you can have by doing this. So if it's intimidating at all, I'm just going to encourage you
to get over it.
To get over it. As somebody who's door knocked and honestly doesn't like it, like, this is random door knocking I'm talking about, not pop buys to people but it's not that bad. And if it's somebody you're going to have great conversations. So get over it.
Yeah.
Have fun. I'm also talking to myself. I need to go do pop buys.
My one other thought for, like, including pop buys, and I mean, just reaching out to people in general this holiday season is it's okay to ask for referrals. I think it's really, really hard, including myself. It's really hard to ask someone for referrals. But there's ways that you can do it that aren't like super salesy. Like, for example, even just in a letter you write to say, hey, if you know of anybody who's wanting to move, reach out. Make it really simple too.
Yeah, kind of casual.
Like, text me or call me so that they know, like, I'm not going to email you. I'm not going to look you up on your website. I'm just going to send you a text. Like, just make it super clear how they should refer to you.
Oh, that's a good point. Giving that, like, actionable thought in their head when they come across somebody. I like that.
Well, that's that's my thoughts on
at
least what I'm going to do this holiday season.
I got another one for you.
Yeah, let's hear it.
Speaking of referral partners, or forgot what you call them, but referral partners. So if you're a real estate agent, lenders, title people working at the title company, escrow officers,
other agents,
attorneys, also not just referral partners, clients, past clients, potential clients, future clients, whatever you want to call them, events. There was a lender I work with, and he put up a bowling event. So went and reserved a bunch of lanes at the bowling alley, invited a bunch of people on Facebook. If he didn't have them on Facebook, I'm sure he called them or whatever, and did like a big bowling day. Right? That's awesome. Yeah. You're getting people out to have fun. You get to be in a non-threatening business environment.
Yeah.
A non-threatening, very casual environment, where you just get to go have fun, get to know each other a little bit more. And I think the power of, like, investing in those relationships, we all know that real estate is a relationship game, right? Investing in those relationships can go a really long way. I mean, one little event or one little pop by can turn you from being a real estate agent into a friend.
Yeah.
People like shopping with their friends.
People like shopping with their friends. Yep. They hate getting sold, but they like shopping with friends.
Exactly.
So, I like that idea of, even just a letter to some of these referral partners, like, hey, we've worked well. Like, thank you so much for your help in the past. I'm inviting all of my, business partners or, partners that I work with, in this industry, to like a fun bowling night or something like that. Yeah. It's a good idea. I've never thought about that.
It'd be cool. And then you go out and have fun.
Yeah,
too.
Exactly.
Like, you had to organize it or whatever, but man, you're all gonna go have fun and have a great time together.
Yeah. I will just say this whole holiday season that is full of events. It seems like the last 2 months of the year are just booked up for me. Like, every weekend, almost every night, it seems like I'm doing something, and it's a great time to just connect just connect.
Yep, you're right. One more thing I'm going to throw out there is giving back, right? We talked about this earlier. I mean, you could do, and you don't have to go crazy, but you can even do some sort of little fundraiser, you know, little PR, you know, do some good for the community. You mentioned an idea earlier. You could volunteer. There's a big need for that kind of stuff around the holidays, you know, for less fortunate individuals who need winter coats and stuff for the school season and toys, you know, for Christmas or whatever. And so it is a really great time to give back. And, you know, if you have a little bit of additional time or financial security where you can put up a little bit of money to help some others out, that's really great too.
Yeah, I will say I genuinely believe that if you give to the universe will give back to you. And you don't even need to, I mean, as far as giving back, you don't even need to use it as a PR opportunity. Like if you're volunteering time, you're going to be with people that are probably also volunteering time. That's a good image for yourself in general. But if you donate food or you donate money to food banks or shelters or anything like that, I don't think you need to post your name about it. I mean, post about it, but
everyone's going to.
I mean, you're going, yeah. I mean, if you volunteer time, definitely, I would say post about it. Sure. But I think if you give to the universe, it'll give back to you, and
100%. And it's really needed this time of year too.
It is.
So it's a win-win for everybody, right? Cool. Any more thoughts, my friend?
I think we have it covered.
I think we wrapped it up. So enjoy the holiday season. Have those conversations. Remember, you're the source of information. You're the expert. Have fun talking to Uncle Dave at the dinner table about the real estate market.
Yep.
And any last words, Miles?
Thanks for tuning in.
Yeah, we appreciate it, guys. We come out with new episodes every Tuesday at the Realty Room. Again, if you want to follow Miles, you can follow him at Miles Pointer on Instagram and myself at Real Mark Butler. That's Mark with a C. See you next time.